Another great day for NIO stock. At this very moment it is up over 6%, close to $48, and even if it drops a bit later in the day, I am very happy with seeing these kinds of gains. For some reason it seems like NIO tends to open the market quite low and then climb up towards the later parts of the day. In this video I will go over just why NIO seems to be climbing this well despite already having such a crazy run up, doubling in share price since October. I will also go through why I think NIO is looking bullish, technically speaking, and also whether it is a buy at these current higher price levels even after this rally. If you're new here, my name is Sam and welcome to the channel. If you find this video valuable, I would appreciate it a lot if you press that like button. It just helps out my channel so much. Also subscribe if you want to see more NIO and other EV company updates in the future. We are a fast growing community and I would love to have you on the journey with me. Now let's get back to NIO. So why are we up so much today of all days? Looking at the weekly stock chart, we are close to a new weekly high, but the great earnings report were released on Tuesday after market close, and since then NIO went all the way from around $49 to just about $43. Again, almost breaking that $50 barrier, which we managed to do for a very short period of time last week. But since that $43 weekly bottom, NIO has steadily climbed up, and I think this is because the bulls are very strong and have conviction in their investment. If every time you see a downward trend in a stock and the stock just spikes back up the next day or even sometimes just a couple hours later, it is because investors who have researched the stock are convinced that this is a good buy, which leads to them using these dips to buy more shares, which in turn results in buying pressure and the stock going up in value. And by the way, I think this buying pressure is not only coming from us common investors, but also from tons of institutional money taking these opportunities to buy a lot of NIO shares. As I have said in earlier videos, we see state retirement funds from states like Ohio, New Jersey and California all go into NIO, as well as the world's largest hedge fund, Bridgewater Associates, recently doubling their position in the company, just to name a few. Now let me tell you why, just like them, I am bullish on NIO as well. I think NIO will keep rising in the future on this perfect storm of data that points to accelerating demand, production, deliveries, revenue and profitability. Over the last month, the EV market as a whole has received some very good news and NIO is at the heart of it. As one of China's leading EV manufacturers, it offers not only growth but exponential growth and exposure to the world's largest car market. The melt-up began in late October when it became clear that China's auto market and NIO in particular were performing better than expected. The rally accelerated in early November when the company reported a 100.1% increase in year-over-year deliveries to set a company record, and these news were amplified a few weeks later when China reported auto sales rising by 12.5% in October, which was higher than the expectations. As well, they had a 105% increase in electric vehicle sales that were broad across all categories but led by the low end and spurred by China's decisions to keep extending its EV incentives. Reports from Lee and Xpeng prove the market right, so it is no surprise that NIO also managed to beat these consensus estimates. And NIO really managed to beat these expectations. The company delivered more than just a record number of cars. They delivered results that put it firmly on track for profitability in the future. The $667 million in revenue is a 153% increase from the third quarter last year and an 18% increase from the second quarter of this year. It beat the consensus by 800 basis points and carried through to the bottom line. The GAAP earnings per share came in at a negative 14 cents or 3 cents better than expected. A loss to be sure, but one that is due to capex and expansion, not margins. Margins improved from minus 6.8% in the prior year to 14.5%, marking the second quarter of positive operating margin. We achieved a new record high quarterly delivery of 12,206 ES8s, ES6 and EC6 in total in the third quarter of 2020, followed by the best ever monthly deliveries of 5,055 vehicles in October, said CEO William Bin Lee. In view of the growing market demand for our competitive products, we are motivated to continue elevating the production capacity to the next level. we expect to deliver 16,500 to around 17,000 vehicles in the coming fourth quarter. I want to emphasize just how huge this is. With a positive operating margin, NIO really can focus on increasing their production capacity to increase the revenue and take the company to the next level. And it seems like that is already what they are planning to do as well. Now, I think the technical outlook for NIO is also quite bullish. To begin with, shares of NIO are in a clear uptrend. In this case, it would be quite foolish to bet against the market until we see some really bad news or maybe a clear bearish signal emerging. I don't think either of these is likely at this time, and I would really only take those dips as buying opportunities regardless, since I am in it for the very long term. But these recent bullish signals do tell me that even for shorter term growth investors, NIO is looking attractive right now. Looking at indicators such as the MACD, we see that this is not only bullish, but it is strong and converging with the new highs. What makes this signal even better is the fact that the MACD is convergent in the near and long term. Moving on to the stochastic is moving lower right now, but that's good. The market is healthy, it's not overbought, and there seems to be room for the stock to move higher. Of course, there is always the risk for short-term fluctuations, but if NIO does dip down again, I will just keep on buying. Long-term bullish confirmations of the trend, including and in particular, if we manage to break out to the new all-time high of $51, I think could lead to just some crazy rallies in the future. With that said, I mostly look at fundamentals when investing, and even though the technicals are good right now, I think the company behind them is what is important. In 3 to 5 years time, I think NIO will be up by a lot, regardless of these current technicals. But with that said, it is always nice to see the market being bullish on a stock that you own yourself. So should you buy NIO at these current levels or not? Now, I'm not a financial advisor, so don't take this as actual advice, but yes, I do think it is a good buy right now. Personally, I really like the dollar cost averaging and just buying very few shares every week, regardless of the movements. But if you don't own any stock, you probably need to be a bit more aggressive with buying NIO if you want to build up decent position in the company. And therefore, buying even more at these higher prices might be a good idea, since you never know how the stock will look in the future. Just make sure to do your own research, that you already have a well-diversified portfolio, and that you are in it for the long term, and I think you will be just fine. And with that, I want to conclude today's video. If you enjoyed this one, make sure to give it a like to help us reach out to more people about NIO and show them why it might go up so much, but also make them aware of the different risks of owning such a high growth stock. Pressing that like button is really the best way you can support me and this channel, and I would appreciate it a lot. Also, subscribe if you want to see more similar content, and I will make sure to provide it for you. We are almost at the 3,000 subscriber mark, and I thank you all for the support. And if you have watched all the way to this point, subscribe and join us in the journey to hit 10,000 investors by the end of this year. Thank you for watching and enjoy the rest of your day.